So who are we considering each scenario then? Trade and other receivables refers to debtors, exactly. Okay, so the debtor is generally what you're going to be looking at here. You can have other receivables. We'll look at some adjustments later on. Prepaid expenses, accrued income. Those are adjustments that come up later. Right now, we're not looking at that. We're just looking at trade and other receivables. A receivable means I'm still going to get it. So it meets the definition of an asset. Debtors is a receivable. It's something that the customer is owing the business. Does that make sense? Perfect. Right, so I've given you some terms here that come out in the chapter. They talk about credit transactions, which is a credit sale because I'm looking at a receivable, not a payable. Trade payables is a separate chapter altogether. Okay, then we'll discuss that then when we get there. Right now, we're focusing our attention on our debtors. Credit terms apply because you're going to have T's and C's. Okay, so what is the interest am I going to charge on those accounts? When must they pay, etc., etc. What discount can I have with a debtor? Discount allowed. Why discount allowed? Because you give them the discount. Okay, so I'm going to allow them a discount because they're not going to have to pay the full amount. Output VAT is here. Why is output VAT here? Well, when looking at debtors, am I buying or selling? I'm selling. So if I sell, I'm going to have output VAT. Right? And that'll be part of the actual amount that's owed to the business. Okay, because what will the debtor owe you? The full amount or the net amount? The full amount. Okay, they're going to owe you the VAT inclusive amount. You are going to keep the exclusive and you're going to pay the VAT over to SARS. Right, this is new allowances. Okay, we'll discuss what they are. An allowance is just a negative asset. It's something that allows us to present information more accurately. Okay, we'll discuss what that is just now. And then you've got a credit loss or a bad debt. Do debtors always pay? No. And if they don't pay, you need to write them off. Right, so if bad debt is written off, it's considered an expense. That's what you're looking at. Okay, so those are the accounts that you need to know. The ones that are more important, make sure you know what a debtor is. Make sure you know what allowance is. Make sure you know what a bad debt or a credit loss is. An allowance is a negative asset, yeah. It might or might not be on your notes. If it isn't there, just add it. If it is there, just highlight it. Okay, so it's a negative asset. A negative asset meaning it reduces the value of the asset. Because think about it. Do debtors always pay? No. Right, so what are you looking at? You're looking at debtors at a specific amount. Is that amount going to be everything that you're going to receive? No. Okay, so your debtors might be 100. 5% of your debtors will probably not pay. Okay, that's based on past experience. Right, so a business that has been running. Okay, sometimes you have bad customers. Customers that buy and they just don't pay. At some point in time, you need to write it off. Okay, you can chase after them, chase after them, chase after them. If it doesn't work, write it off, take legal action. Okay. Right, so we're looking at a settlement discount. A settlement discount will apply to a debtor and a creditor. But if I'm looking at a debtor, it's going to be discount allowed or discount received. Which one? We just spoke about it. Discount allowed. Okay, you'll never have discount received with a debtor because it doesn't make any sense. Right? Because you're not paying, they're paying. So if the debtor's paying the business, you allow them a discount. Okay, if it's a discount that's allowed, it'll be seen as an expense. Expenses go up on which side? On the debit side, because it's an expense. Okay, that's why we're debiting the discount allowed. Okay, the reason why I've shown input VAT here is later on, they don't really discuss it, but they talk about this whole scenario about discounts being what? Like expenses, similar to expenses. Okay, so I'm not going to go into too much detail because it can get quite complicated. If you want to, I can discuss it afterwards. Okay, but just to give you what you need to know. Discount allowed is seen as an expense. An expense can give rise to input VAT. And that's why we sometimes record it as long as we're a VAT vendor. We wouldn't record it if it wasn't a VAT vendor. We only record input VAT on the discount if they're a VAT vendor. Okay.
Sorry, I'm getting earlier you said when the bank balance goes down, it decreases the left side.
If the bank balance goes down,
if
money comes in, bank is an asset. Assets increase on the debit side.
Yes.
Okay.
And then the money is going out.
If money goes out, bank is an asset. Assets decrease on the credit side. Credit side is the right, not the left. Okay, credit is the right, debit is the left. Doesn't matter which way you're looking at it. Okay. Right, so if you're looking at the screen, the left is that side, the right is this side. Okay. Alright, so bank here is going up or down. Let's discuss that. That might make more sense. Come guys, bank going up or down?
Going down.
Going down. Going up. Which one? We just spoke about this. They're a debtor. What relationship does the debtor have to the business? They owe you. So what happens when they pay you? Your bank's going to go up. That's why I'm debiting the bank. Okay. What's going to happen to my debtors? It's going to decrease. Why? Because they no longer owe you. Okay, they've settled their accounts. Right, so that's just something to consider. We'll see this later when we do practical questions. Okay. Right, here's a note about the allowance. What is an allowance? It's a negative asset. Okay, the best way I can approach this is by thinking of your disclosure. Okay, so do you agree? When I sell, I'm going to create what? Debtors. Asset increase. Okay, if a business has been operating, and they've been operating for a year, and the next year, they don't have a certain amount of receipts. Okay, that would tell them that, well, if I'm selling, and if I sell, let's say 100, okay, that's the total. So if 100 represents all my debtors, a small percentage of them don't pay. And if the small percentage don't pay, can I show my users all the debtors? No, because the user isn't going to get all of the benefit. Does that make sense? Do you agree? Okay, think about it. You sell something to someone. Okay, let's use this example. You sell to me. Okay? You sell to her. What are you going to show in your books? An asset or liability? You're going to show an asset. Okay, because you've sold. Right, so if you're showing debtors, you're showing how much is outstanding in your books. Okay? Let's assume I'm not going to pay, but she will. Is it accurate to show the full 100% then? No. Okay, it wouldn't be accurate to show my debtors amount and her debtors amount if you know I'm not going to pay you. Does that make sense? And that's what an allowance is, and that's what a provision. Sometimes they call it a provision. Okay, it just means you're creating an amount to make your disclosure more accurate. That's what you're looking at. Okay, so there's the example, 100. Am I going to show 100? No, I'm not. I'm going to show 100 minus 5%. Okay, or 100 minus 5. Because I know that 5% of my total debtors aren't going to pay. Right, so showing the full amount would be dishonest to your users. Right, because you're trying to show them the true picture. Okay, but it's based on past experience. So the question needs to tell you what happened in the past. That's what they need to tell you. Okay. Right, so if I'm looking at an allowance, what type of balance would an allowance have? Well, here's the note. Negative asset. Okay, so you guys know from your rules that you have an asset, and an asset will have a debit and a credit. You know that the asset rule is plus on this side, minus on that side. Right, am I looking at an asset? No. I'm looking at a negative asset because this is the allowance. Right, so if I'm looking at the allowance, what balance will an allowance have? A negative asset balance, and what balance does a negative asset have? A credit balance. Okay, that's what you've got. Right, so an allowance will have a credit balance. If you're going to increase the allowance, are you going to credit it or are you going to debit it? Well, let's think about it. What balance does an allowance have? A debit or a credit? A credit. So if I want to increase the allowance, am I going to credit it with more or credit it with, or debit it to reduce it? If I want to increase the allowance, am I going to debit or credit it? I'm going to credit it, exactly. Okay, because an allowance has a negative balance. Right, so if I want to make a negative balance bigger, I have to keep crediting it. Does that make sense? Okay, so let's write a note there. Adjusting the allowance. Okay, so increasing the allowance, credit the allowance. Okay, decreasing the allowance, debit it. Okay, that's what you're looking at. Okay. There are some really good examples in your study guide. Okay, and remember, they go through all of it in detail. Alright, so I would go through those as well ahead of time. Okay, so when we get to questions, okay, so when I look at past paper questions with you and we discuss it, it's not like you're seeing this for the first time. Okay, because at least then you've looked at some of the examples in your study guide. Okay, I'm going to use as many of the past paper questions as I can to make sure that you guys are okay with the approach. Okay, because that's at the right standard. The ones in your textbook are very basic. Very, very basic. The ones in your study guide are very basic. Okay, the ones in your tests and exams are a little bit more tricky. Okay, but if you can look at those basic examples, you'll see it's really not that bad. Okay, we're just going to apply this. Okay, we can even put the slide back on later when we cover a question. Okay, it's really that simple. Just think of it as what? A negative asset. So does it have a debit or a credit? It has a credit because it's a negative asset. Make sense? Perfect. Okay, then there's just a note here about a control account. What does a control account do? It looks at everything. It's the total. Okay, I'm literally taking all my debtors and all my sales and I'm recording it in one account. Okay, so let's add to the slide. If I'm looking at my debtors account, what will debit my debtors account and what will credit my debtors account? Come, give me some things that will affect this account. Things that will affect your debtors. What transactions will affect my debtors? Okay, you're looking at returns already, no. What's the first step? How do I create a debtor? Start there. Yes. Okay, do you agree? In order to get a debtor, I need a sale. So credit sales is a transaction that will affect my debtor's control. How would credit sales affect my debtor's control? Increase or decrease? Think about it. If you're selling on credit, will you have more debtors or less? You'll have more. So what am I going to show here? I'm going to show sales here from the sales journal and an amount. I'm just going to put an amount, 10. What else can I see in my debtors control account? After you've sold to someone, what do they normally do? Well, possibly. Okay, so if they return, then you'll see the sales returns here. A sale return will do what to this account? Increase or decrease? Decrease. So sale return would go here. Sales returns journal. What else will happen with this account? If they don't pay you, well, first they have to pay you, right? And they will pay you. Some will pay you. Some won't pay you. Okay, some won't pay you. You're looking at two different things, right? So if they pay you, is it a receipt or a payment? It's a receipt. What is that going to do to the debtor's control? It's going to decrease. It's a receipt. So bank is going to decrease the debtor's control. Bank will be crediting the debtor's control. Okay. Right, now we can talk about yours. Bad debt, credit losses. What will a bad debt or credit loss do to this account? It won't increase the debtor, so that means you write them off, you've got more. No. It decreased, that's right. Okay, you don't have more debtors if you're writing them off. Think about it. I have debtors. Those customers don't pay. So will I have more debtors or less debtors? I'll have less debtors because I'm writing off the ones that don't pay.
Doesn't that increase your expenses?
See, that's a different account. That's an expense. Bad debt is an expense. Okay, so you're looking at the double entry. Here I'm just looking at the debtors. Okay, so you're right. You would have debited the credit losses and you would have credited the debtors. Credit losses / bad debts. Okay, what else can go into this account? We spoke about interest. Discount allowed as well, yes. Discount correct. So there's another one. There's two actually then. How will a discount affect this account? There's the answer. Good. So you'll see discount allowed on this side. Okay, and then interest is the last one. Interest will increase this account if you charge your customers interest. Interest income, general journal. I need to put journals here. General journal, discount allowed, cash receipts, or general journal, depending on how you're accounting for it. Okay, and those are all the different transactions that could take place with your debtors. Okay, you could have debtors with credit balances. That's not often tested. Okay, if you do, then you're looking at a debtor which is actually your creditor. Is that possible? Yes. Okay, when will a debtor become your creditor? When they pay you too much. Okay, so let's say they've bought from you. They've bought 10, but they pay you 12. Then their account actually goes into credit because now you actually owe them 2 because they paid too much. And that could be possible if you give them discounts and they just pay the full amount. Possible. Okay. Right, and that covers your debtors. That's trade and other receivables. The last bit here is just a note about your accounting elements. See, this is what I was talking about earlier when we were talking about application. Okay, this is what I covered in week 1 and 2. Okay, those are the basics. Right, so make sure if you haven't covered this yet, you do need to go back and watch those first 2 videos because that covers all the theory. Right, I can't stress this enough. This is so important. Right, especially for you guys because you're not going to be studying more accounting. So for you, make it as simple as possible for yourself so that you don't have to struggle with all the different possibilities. Okay, because as I said in one of the other weeks, you can study accounting in 2 ways. You can remember every possible scenario and then recall from memory. That's very difficult to do because if someone gives you something different or slightly different, then you don't know what to do. Okay, with this approach, you always know what to do because you just need to relate it back to the rules. Do I increase the asset? Do I decrease the asset? Do I increase the liability? Do I decrease the liability? Okay, so today we looked at a new account. An allowance for credit losses. a special account. Why is it special? Because it's an asset, but it has a negative balance. So it is still an asset, but it's just recorded on the credit side. Only because it's an allowance. It's a provision. It's something that's going to reduce the value of my debtors. Okay, and I want to show you this quickly. Statement of financial position. Okay, we spoke about all of this before. In the statement of financial position, you're going to disclose your assets and your liabilities because you want to work out the owner's equity, okay, as a summary. Right, so as an extract, okay, in the statement of financial position, you're going to have a section for assets. Under assets, you'll have a section for non-current. Okay, see, this is what you would have looked at. You don't know how to draw up statements yet. We'll learn about it later. This is just for later on, okay? And then what am I going to show under non-current? Nothing. But under current, I'm going to show what? Trade and other receivables, or debtors. Okay, and debtors is going to be shown as brackets, the amount, so the total, okay, the total less the allowance for credit losses. Okay, that's what you're showing. Right, and that's disclosure. Okay, you'll see all of that later on when we actually do the question. Okay, so under your current assets, you'll see debtors, and you'll see the total, whatever it is, minus the allowance. Because am I going to get all of it? No. Okay, so I'm just going to rub that out for now and show you what I mean by that. Okay, so if I know that I've sold a total of 100 and my provision is 5, what am I going to show my users? I'm going to show them 95. Okay, that's what it means. It's telling your user, I'm not going to receive everything. So I can't show you everything. I'm only going to show you what I actually am going to collect, which is the 95. The rest is a provision because I expect to write off the bad debt. That's what you're saying. Okay, and that's what we learned today. Okay, that's a new account that you can add to your other accounts. Happy? Great.